Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look. I'm taking a look at the Aussie versus US dollars. We head toward the weekend. Today's date is September 20th, 2024. Let's get started. Over the last 9 or so trading days, we've seen a move to the upside. Yesterday, we saw a big move to the upside in the Aussie versus US dollar, helped by risk on sentiment as the US stock market surged after the Federal Reserve stuff that happened on Wednesday. On Wednesday, the price initially moved to the upside, then moved to the downside. And then in trading yesterday, what did we do? Tactically, we found we actually broke below the 100-hour moving average. We did hold it on Wednesday, but the price couldn't get below other moving averages, including the 100-bar moving average and also the 50% retracement right around this level right here. So the buyers came in, pushed the price higher, and that moved to the upside. Took the price above the high price going back to August. And it should have sent the price higher, but it didn't. And then we started to use that level as resistance right here, or those levels as resistance, including in the early New York session here today, near the 0.6823 level. So the price has since rotated back to the downside and looks toward the 100-hour moving average at 0.6778. We're going to need to get below that 100-hour moving average. As you can see, again, on Wednesday, Fed rate day, where the price came down to that, found support. On Thursday, we fell briefly below it and moved above it. So getting below it, even though it's an easier hurdle, still need to get below to increase the bearish bias. So take that as a risk and bias dividing level in the short term. If we get below that level, then we'll look toward this level near the 0.7660 level, which is near the 38.2% retracement, and this swing level or swing area all the way down to 0.67487. There's other targets on the downside, including the moving averages here. That's a 200-hour moving average. That's a 100-bar moving average on the 4-hour chart, and also the 50% retracement. So as you can see, if we're going to go lower, we have a lot of hurdles to get to and through. That just makes sense because the price action has been more to the upside. Conversely, if you want to buy a dip, this is a dip area to buy it. We held support against it for the most part this year. So if you want to buy the dip right here, what you're hoping for is a rotation back up to the upside, back up this level, back above this level, and open the door to the upside. Let's take a look at the daily chart. If we look at the daily chart, the high price that we saw in trade here today, this week, moved above the 61.8% at 0.68182. It also moved above the swing area through here up to 0.6820. So going back to the hourly chart, with those levels come in right around here, and you can see how that also it is helping to put a lid on this pair. Need to get above all those levels, 18, 20, 23, and stay above those levels to increase the bullish bias. So that's my look at the Aussie versus US dollar. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.